Welcome to Lesson 21. By now you've decided to sell some shares. How do you decide which shares to sell? I've provided the following 8 guidelines to help you determine which stocks to sell. Let's go through a real-life example with 5 stocks. What you see now on the screen in front of you is the Simply Investing spreadsheet, which you can download from your Simply Investing account. So let's go ahead and click on the worksheet down below. It's called Sample Data Selling. Just a reminder that this is sample data only and not to be considered current. Here's our example with 5 companies already populated and all of their financial data on the spreadsheet. So let's go through the 8 guidelines together. Number 1, EPS growth is less than 8%. So let's take a look at the column for EPS growth and look at the first company, American Express. And we can see that its EPS growth is less than 8%. So I'm going to go ahead here on the right side. There's columns labeled 1 through 8. So I'm going to click on the first column and the first cell, and I'm going to put a 1 in there because American Express has an EPS growth of less than 8%. Coca-Cola is fine. Exxon also has an EPS growth of less than 8, so I'm going to enter a 1 in the cell right here for Exxon. Microsoft is fine, and IBM also has an EPS growth of less than 8%. So I'm going to go ahead and enter 1 in this column here as well. Let's take a look at guideline number 2. The dividend growth is less than 8%. So if we take a look at the dividend growth column, we can see that American Express has a dividend growth of less than 8%. So on the right side here in this column, I'm going to go ahead and put a 1 for American Express. Coca-Cola is fine. Exxon also has a dividend growth of less than 8%. So I'm going to enter a 1 in here for Exxon. Microsoft is fine, and IBM also has a dividend growth of less than 8%. Guideline number 3. The payout ratio is over 100%. And we can see from this column that American Express has a payout ratio of over 100%, and the remaining companies on the list are fine. Guideline number 4. Debt is over 100%. So let's take a look at debt for all of the companies on our list. We can see that American Express has a very high debt. So we're going to enter a 1 here. Coca-Cola also has a debt of over 100%. So we'll enter a 1 for Coca-Cola. ExxonMobil is fine. Microsoft has a debt of over 100%. And so does IBM. Guideline number 5. Standard & Poor's credit rating of BBB or less. So if we take a look at our credit rating column, we can see that American Express is less than a BBB, and so is IBM. Guideline number 6, PE ratio of over 30. So let's take a look at the PE ratio column, and we can see that American Express is over 30, so I'm going to enter a 1. Coca-Cola is fine. Exxon is higher than 30, so is Microsoft, and so is IBM. Guideline number 7. The current dividend yield is less than its average dividend yield. And this is going to tell us if a company is overvalued. So let's take a look at both the current dividend yield and the average dividend yield for our companies. And we can see that American Express has a current dividend yield of less than its average dividend yield. So the company is overvalued. Coca-Cola is fine. ExxonMobil is overvalued. So is Microsoft, and so is IBM. Guideline number 8. The PB ratio is 5 or more. So let's take a look at the PB ratio column, and we can see that American Express has a very high PB ratio, so we're going to enter a 1. And IBM is also above 5, so I'm going to enter a 1 in here. And that's it. We're done. We've now gone through all of our 8 guidelines for potential stock sale. Now we take a look at this column here under count, and we can see that American Express has the highest count. If we were trying to determine which of these 5 companies to sell, American Express would be the first company to sell. Next on the list would be IBM, then Exxon, and then Microsoft. Coca-Cola only has a count of 1 because its debt is higher than 100%. But that might be a temporary situation. And in this case, out of all of the 5 companies, Coca-Cola would be the one that I would keep. Now, if you were doing this exercise by yourself, you would go back to our first worksheet. Right here, I'm going to click on the SI worksheet. And here you would fill in the data for companies that you were considering for sale. And then you would use our 8 columns here, go through the guidelines just like we did, and then determine which company has the highest count, and that would be your first candidate for sale. That's the end of this lesson and the end of Module 7. Let's do a quick summary before we close off this video. In Module 7, we covered the following 2 lessons. When should you sell your stock? And guidelines for selling your stock. We looked at the 4 reasons why you may consider selling your shares. But remember, if you have no reason to sell, keep your quality dividend-paying stocks that have a history of growing dividends, because those stocks, in the long run, will put more money in your pocket. But if you've decided to sell some shares, how do you decide which shares to sell? And for that, we provide the 8 guidelines for potential stock sale. And we did a real-life example. We went through the 8 guidelines and we applied them to the 5 stocks on our list, and this is what we ended up with. And the stock with the highest count would be the first stock that you would consider for sale. In the next module, we're going to talk about mutual funds, index funds, ETFs, and managing your risk. That's the end of Module 7, and I will see you in the next module.